Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. And it looks like we're having another rally attempt in the equity markets. Let's back up here a little bit. Back on January 20th, looked like we may have made a low in the S&P and the NASDAQ. A few days later, we did get the so-called follow-through day, and it rallied for a few days, but it pretty much petered out, and the market continued to drop further. So again now, February 11th, we retested that low on the S&P 500, came right in that range, right about that 1812 area. And the NASDAQ undercut the January 20th low, making a new low. And then last week on the 17th, we got the so-called follow-through day. And the follow-through day is when the indexes rise greater than about 1.2, 1.4% and greater volume than the day before, a few days after a bottoming day, signifies that the market possibly may be in a new uptrend. Now, the significance of the follow-through day is that every single rally we've ever had in U.S. equity markets always starts with a follow-through day. But keep in mind, not all follow-through days guarantee that a rally will continue. They may fail, so that's something you need to keep an eye on. So let's talk about some of the positives. Well, also some of the positive things are pessimism is at an extreme. If you look at the 8-week moving average of the AAII sentiment surveys, the bears are at all-time lows, meaning they're lower than they were in 2011, they're lower than they were in 2008, they're lower than any bear market. So that's actually a positive thing. It's a contrarian indicator, meaning when everyone gets so negative, no one's left to sell. Also, there was a survey by Bank of America Merrill Lynch that showed that global fund managers are at the highest cash position since 9/11 of 2001. So again, that's very bullish for equities, meaning when things just get so oversold, we're looking for the markets to move. Now, some of the things that aren't looking so great is that leadership is still in very defensive names. Utilities are the stocks that are hitting new highs, as are food stocks, gold's moving higher, and mining stocks are doing better. That's really not the kind of industry groups you want to see leading a market. So this may still take some time to work itself out. So what's one to do in this situation? Well, if you're a short-term trader, your sort of pickings are limited because we don't see that many great growth stocks breaking out to new highs. However, if you have a longer term horizon, now's a pretty good time to pick up some stocks that maybe did get oversold. I've talked about these before, some of the large cap biotechs that are still making great money. That'd be like Biogen, Celgene, Gilead Sciences, Regeneron. There might be some good values there. In the technology sector, stocks like Facebook's holding up very well. Google also on a relative basis is doing pretty well. You can pick those up at these levels. Or this morning, actually what we're buying is Amazon, symbol AMZN. It crossed above its 200-day moving average. It got beat up after its earnings. However, it's been making its way back up, and it's got above its 200-day moving average this morning on greater volume. So that may be a play there for you. Again, that's all up to you, your risk tolerance. You might need to consult your financial advisor if any of these trades for you. And some of the other positive things to be of note is the transport. So transports have basically been falling for well over a year. And actually, for the last few weeks, they've been leading the charge, bouncing off the bottom. And the breadth is improving. So these things tell us that the market may indeed have some legs. However, the shorter-term trader might be a little bit tougher here because we're still in a choppy market. However, like I said, if you have a longer-term view, you can pick up some of these quality names at a discount, but be careful because there's still a lot of overhead supply, a lot of technical damage, and we still may chop around here and slop around here. So, as always, that price and volume be your guide. Consult your financial advisors or if any of these trades are for you, and have a great trading week. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.